All right, welcome to the Bullish Bears YouTube channel, and I am Bullish Bears Jeremy. I'm going to show you yet another strategy I've kind of been developing, and I've got it pretty well dead on now, and it's starting to really shine when it comes to picking entries and exits on basic Bollinger Band signals, and also spotting measured moves very cleanly with really minimal effort, and the reliability of your trades really gains from this. Let me lead on a little bit. First, I want to give a big shout out to John Bollinger himself. I hope to shake the man's hand one day. I really am a very strong admirer of the man himself. And Bollinger Bands have been wonderful at providing really good signals on when to go long and short. In fact, they've added just that to the indicator on TradingView as we know it. So you have B band LE, that stands for long entry signal right here. Here you have a short entry signal. Now, the only caveat is that you have to pay attention to what it's telling you. It says -2, +2. That is a trade that takes place over 2 deviations from a Bollinger Band poke back to the middle band. As you know how Bollinger Bands are built, they consist of a simple 20-period moving average, and the Bollinger Bands themselves are actually 2 deviations above and below that center point. So effectively, when volatility comes in, those bands widen, and of course when volatility goes out, they narrow. And they give you signals in between. They give you little what's known as Bollinger Band pokes, where trends short-term and long-term tend to reverse. Let's focus on the scalping part of it though. This is, after all, a 5-second chart, and I was pretty confident on the opening range today being within this zone. This is a liquidity zone I've identified further back, and I'm going to show you just how to put a FIB band on this in a way that really makes sense for spotting these 1-for-1s, measured moves that I love to trade, and picking them off like nothing. All right, let's get to it, but first, let's get my mug out of the way. There we go. Okay, so we're going to start by finding and identifying any common trend line within any consolidation or trend within price action. So in this case, we look bullish. If we were looking at the opening range on the market, we would probably see just this part of it. We would probably start looking right around 935, 940, somewhere in that neighborhood for consolidation. We can often find that consolidation in the pre-market. We could certainly line that up too and pick off some opening range moves. But I like to have stuff that is more reliable. I like to have measured moves pop up that can be easily identified and thus easily traded. So let's start here as if we just opened up the day and we saw this little trend start. So let's go ahead and draw across this common trend line. Here where there's a support line, it's angular. We're going to go up here, grab a Fib Speed Resistance Fan, which is available in the drawing tools on TradingView. I'm going to pop that up and just stick it to where it has a start point here, end point there, and we're going to line it up to the first, or the last high on this session here, right in there. Okay, so what we've identified is all the fib levels that come out of price action from this consolidation. So you've got fib points, and there's a lot of math involved in fibs. There's like the 33.6 and the 50% and all that happy stuff. But we don't have to care about the math. We just want to identify measured moves, and we want to verify our buy and sell signals within that. So here we have a series of a trend and a consolidation within, roughly within 2 fib points. And then we have here no signal from the Bollinger Bands indicator, but we do see a measured move take shape here. So we see a 1 leg, a 2 leg, and a 3 leg. So we've got a 1-for-1 here, and we've got a 2-for-1 down to here. Now let me expand this a little bit so you can see it better. How about that? Okay, so we have a rejection off a division line, and if you've seen me draw my manual fan lines, you would probably see a division line touch right on here across the top of this. So that would be pretty much an indication that there's a reversal here. There's a nice evening star set up on the candles, and of course price broke below the existing fib line here, and this is the trade entry right here. Price is under the 8-period moving average, confirmation was 8-period crossing below the 20, and of course price crossing below that fib line. There's a 1-for-1 bearish trade here. So you got this move, expect an equal move output. And you don't have to close that position when you get to here. You can continue writing if you get confirmation that that is going to continue. And we certainly did so, because we came to the next fib line, we put a bar through it, we retraced really quickly, rejected the 8-period, and we got a continuation of sell. And we didn't get a buy signal until we hit the first fib line outside of our common trend line right here. So we could have caught a very nice 2-for-1 measured move right on this signal here and taken a nice trade from the crossing of the middle band on down to the lower band touch at the end of the trend. And if you notice Bollinger Bands, the trend bent right here, confirming that this was going to continue down. And then you see that it curled sideways right here and began to curl up some, telling you that this trade was over. And obviously it printed a long entry signal here, which was a correct one, right at a particular fib line. So end that trade there. There's your sell trade or your bearish trade done. 2-for-1 measured move. Simple. Now, if you were bold enough, you sure could have taken the 50% retracement, which is another common trade that I take whenever I see a descending trend in any time frame. I'm usually pretty confident of that 50% retracement. And we certainly did get a long entry signal here. It was confirmed with price bouncing off of that fib line. Certainly you could have traded that leg back up to the halfway point of this trend and done very well. The exit signal wasn't very clear, except for you had a couple dojis here, and price continued to crawl along that fib line. You certainly could have held on for an extension on that, but I probably would have taken it right off of this bar here and been done with that. Next signal, we have a nice common bearish engulfing here, and then price continued to follow through, known pivot, and you got a little bit more than a 1-for-1 here out of that rejection. So there is a possible trade here, but there's a higher probability of a 1-for-1 for this whole move on a rebound, and that was here with this doji. So we didn't exactly have anything indicating there was a Bollinger trade here other than the middle band rejection with this doji, as well as the 8-period crossing down. So that could have been a good 1-for-1 and even an extended 2-for-1 bearish trade there, although not as probable. So if you look how close we are to opening range, that probably would have been a bit of a risky trade there. So we like to wait till things kind of settle out of that opening range and take the really obvious trades later. Here we have one. There's our common trend line. Price touched it again. Here is a buy signal as price comes up over that 8-period, and the 8-period crosses the 20. Nice clean signal. You could have taken this first leg, and then also, if you realize that this was the first fib, you could have either profited there or continued to ride this to the 1-for-1. Or, if you want higher probability, notice this support bounce. Notice that it exceeded 50% of the previous bear trend, and notice that it accumulated here. So you get a very high probability trade in the bullish 1-for-1 on this signal here. And that certainly actually gave you a very clean trade. See these sticking out of the top of that band? Just above a known fib level. Reversal. That's bearish engulfing, or tweezer top as some people come to know. Get out. Take your money and run. Scalp it. I'm wearing a t-shirt that says just scalp it on it today, just to make this video. So that was a clean trade. Very easy, high probability, and patience pays off. Would you trade this? Probably not. There was a Bollinger signal here from this Bollinger Band pinch and expansion up to a sell signal here, but I probably would have ignored that. I would rather trade the obvious and the highly probable. That being said, I might have even gone so far as to have ignored this. I'm pretty patient when it comes to not trying to chase chop like this. Obvious trades, easy. Very choppy trades, this can be part of your trading plan, and this plan is also noted, as we say it, a program. If this, then that. If I see this, I can do that. If I don't see this, I can do nothing and wait until I see what I want to see or what's obvious to me. So you can certainly be patient through all this chop and just wait. And that kind of takes me to an adage that a very, I don't remember who the author is, but somebody said, trading is, successful traders know that it's 80% waiting and 20% trading, whereas most unsuccessful traders find themselves doing 20% waiting and 80% trading. And those are the guys that typically get burned and eventually give up. So I like to wait for a higher probability trade. And there was one right after this choppiness right here, plain as day. So we have a Bollinger Band sell entry signal right off the top here. There's a nice doji poking out and a trend that broke the 8 period. Certainly went down. Note that we have our common trend line here. And this is leg 1. When price broke over here, this is your high probability trade. And that was fast. These are 5-second bars. That trade was over in 15 seconds. Really clean 1-for-1. Didn't need to touch this known fib line down here at all. All you needed to do was say, okay, this is one leg. There's your consolidation. There's your continuation. There's your second leg. Clean trade here. Short, close. Done. How many points is that? Just 2. But hey, it's a reasonable trade. Coming back up, you'll see that there was a long entry print here. Again, I tend to ignore these until I can see a high probability setup. And there it was. Returned back to our common trend line, accumulated. Long entry would have been right on this nice little hammer here to go and keep a tight stop in this mix and run it for a 1-for-1. Very clean. You got one here, one here. Easy trade. That's what I like to look for. So knowing when to see these, when to take action on these trade setups is key, but waiting for them and being very patient for them is absolutely necessary evil to endure. So certainly take advantage of knowing where these 1-for-1 measured moves are, and using this fib band will really help you to clear up the signals that you get from Bollinger Band trading. And over time, if you get really good at spotting these, you won't need any of these indicators. You can just spot this on the candles themselves over time. But using these tools as a guide to learn the trade is going to be absolutely beneficial, and this just makes it easy. I'll still use them for myself when I'm having a hard time trading chop because it makes it easy to spot those 1-for-1s. That was nice and clean. Again, down the run, rejection up here. As things tend to broaden out and you start to see more of a trend form after the opening range that kind of gets choppy, you start to see some other stuff that makes sense to you. So you get a rejection here off this known fib level. This is where your bigger moves tend to happen. However, this channel isn't a very reliable trade or an entry unless you caught this signal right here off of that common fib line. So this is one where you would probably run a trailing stop trade, and you probably would have got taken out right around here if you entered short here. It wouldn't have been a very bad trade, but certainly there's better ones to wait for, knowing that your 50% retracement of this was right here, back to that common trend line, and the 1-for-1 was divided here, leg 1, break, leg 2. Done. 1-for-1 measured move. You can ignore this, but take note of it, knowing where your targets are for the rebound, and you can trade from the reversal here and continue, or you can take the higher probability trade when price broke this common trend line, take the 1-for-1 that comes out of it. That would have been a pretty easy trade. Looking even further down the road as time moves on, and whoops, I just dragged my liquidity zone, that's okay, I'll fix it later. You can certainly see there's a bit more chop, but then I had a little bit more of an opportunity, and this is a trade I took with options today very, very well. And let me drag this over. Bam, my liquidity zone. This is this area here. I was very confident that if price got into this too much and it definitely teased running exactly half of it in this move here. But I was a little busy this morning trying to record this video when this was happening. But then I realized, hey, it'll usually come back up, test it for resistance, and if I see a reversal here, I can catch a really nice move, and I sure as heck did. Because once it breached that liquidity zone pivot at the top of it one more time, didn't have any short entry signals except for here. And that would have been a bad one. That would have been stopped, killed, instantly done. This break right here was a very clean signal right through the 200 period. I nailed this one. Went short with a quick 0-day debit spread and netted a 300% return right down here. So effectively, when you catch these signals, you can really take advantage of them and know that this right here was an accumulation. I got short up here knowing this was a breach of my liquidity zone, but I was able to take advantage of staying in the trade in this 1-for-1, and then when it broke over and went really quick, instantly take my profit button. These are parabolic, whether they're up or down, and they don't come often, but when they do and they give you a clean 3-for-1, which is rare, you nail one hell of a profit. And it went exactly to the bottom of that liquidity zone, and I bounced it right there. Very clean setup. Hard to recognize on your fib lines, but knowing where liquidity zones are going to be something else that I talk about in my next video. And I'll tell you how to find those in that video, so stay tuned. That's coming up. But for now, learn how to scalp these 1-for-1 measured moves using the tools in this video as a way to just make your trading easy. Once you get really good at it and you start to become very confident in your trades, then you can learn how to pick these off. So certainly practice this with your opening range, Bollinger Bands, and fan line setups. And once you get used to that, check out the next video. Thanks again for joining me, guys. That is all. Have a wonderful day and a great weekend. It is a Friday. I'm looking for a great weekend to occur. Next week, I'm expecting some volatility in the market, so we'll stay tuned for that. We'll get into some watch list stuff, and we're certainly going to have a good time next week, I think. Thanks again. Bye.